Let's talk money, real money, not just what's coming in for you as a business owner, but how to keep it, grow it, and actually feel good about it as a business owner. Today, I am joined by Molly Nelson. She is a certified financial planner who works exclusively with females and female entrepreneurs like you and me. And trust me on this, she's not your dad's retirement seminar. Molly is so good, and especially good with females, on how to make sure that you're utilizing your money the right way and future planning and financial planning the right way. And then I kind of tweak it in terms of what do we do as entrepreneurs and business owners, because oftentimes we're not thinking that way. We're just thinking of the profit that we're getting monthly and annually right now at this point in our lives, and not 10 or 20 years from now. So Molly and I cover what financial planning actually means for creatives and entrepreneurs and business owners, why your business and your personal finances are way more connected than you may think. What are the legal steps to really set up your net worth as an individual and a female? And what to do if you are behind on saving? Hi, me too. At one point, I've tried to make it more of a priority now. And she really talks to you about what to do with money coming in and how much to put where and what would be the best benefit to you at various stages of your life. And then Molly also talks about really just getting your financial shiz together, even if it's messy right now, having a better understanding of it. Financial and legal goes hand in hand, which is why I really wanted to have this conversation with Molly. So if you've ever felt overwhelmed by money talk, you've avoided looking at your accounts across the board, or you've thought, I will figure that out later, especially with financial planning and retirement, this episode is not for later. It's for now. She's so clear. She's compassionate. She's been in the business a long time. She's really able to boil it down for you in very understandable speak. And she really, really gets the entrepreneurial roller coaster. So let's get into this episode on financial planning for entrepreneurs with Molly Nelson. Hey there, I'm Paige Griffith, your host, an attorney for small business owners, and the founder of The Legal Page. I help online businesses and creatives get legally legit in no time. In this podcast, I break down and simplify legal talk while providing practical business guidance every step of the way. With over a decade of experience in both entrepreneurship and the law, think of me as your go-to legal resource, here to tackle all those what-if scenarios so that you can focus on what you do best, growing your business. As a gentle reminder and disclaimer, I am an attorney, but I am not your attorney, so be sure to seek legal counsel for personalized advice. Welcome to the Legally Legit Podcast. All right, listeners, I am here with Molly Nelson of Money Sense with Molly. Her slogan is financial literacy for someone that speaks your language. I love that. I'm all about making tough information approachable and digestible. As you know, I do the legal and Molly's going to give you the financial. So I'm really excited about this conversation. I know all of you are going to benefit from all of her insights so much. We're going to talk really about us being female entrepreneurs and getting financially savvy and savings accounts, setting up for retirement, and so much more. So Molly, thanks for being here.
Yeah, thanks, Paige. I appreciate you inviting me and excited to chat.
Yeah, me too. So to kick this conversation off, why don't you just give us some background about who you are, what you do, and why you are so passionate about this new venture?
Yeah, so Molly Nelson, I have actually been in the financial services industry since 2006, and I've been a certified financial planner for many of those years. Oddly enough, I actually got a degree in elementary education way back, but decided I vividly remember sitting there my senior year thinking, I'm not actually sure this is for me. So I ended up getting the degree. I was a teacher for a hot minute and then realized, yeah, for sure that wasn't really my path. So that was back in 2006 and got going with financial services at that point. Did some, traveling and studying abroad, but have just always kind of liked being around people, and found that in my time as an advisor, the part that I really succeeded at was the educational aspect of it. So it was really kind of a perfect marriage between my background as an elementary ed person and, what I want to do now with financial services.
Love all of that. Molly, I just want people to know how we met because it's such a good
Yeah.
story.
Yeah, it totally is. So, the backstory on that, we have a mutual friend, Danielle, who, when she knew I was kind of taking this direction to go open a business, she said, "Oh, you should talk to Paige. You should talk to Paige." So, of course, I had to go Instagram stalk you. And we did talk a little bit in the DMs, but I'm sure you get lots of DMs every day. But after that, I was, we're trying to get together to have a coffee or whatnot. And then I come across you sitting at the park, and I just dropped one of my kids off, and I look over and I was like, is that Paige? Like, I knew you had some kids and you were walking, and I was like, oh, so like a creeper, I came up. I'm like, hey, are you Paige? And you're like, yeah, I am. So, and then small world, of course, my husband, and the rest is history. But yeah, it was pretty funny. I was like, well, that's the universe obviously putting you in my path, so it worked out great.
Yes, it did. It's so fun to bump into people around town that you like only know virtually, but Montana, you guys is like 1 degree of separation. So of course we
Yeah.
started talking and we were like, "Oh, we know this person and this person," and her husband's an attorney as well, and so like I knew him through a previous job I had, and it's just been fun to get to know you and to kind of see your
Yeah.
transformation into entrepreneurship and what you're doing now with Money Sense. So I'm really really excited.
Yeah, well, thanks. I
What
appreciate you've done so great. It's been great to have a good role model there to follow. So,
Oh, you're so kind. Yeah, I love just sitting over lunch or coffee and talking all things business. So it's nice to have someone that I can, just think up and vision and wonder with. Molly, let's talk finances. I'm going to start kind of from the beginning of why do you think financial planning feels so intimidating for so many women, especially if you're a business owner, and like how can women just break through that mindset?
yeah, absolutely. I mean, the whole industry has been built that way, right? I mean, the industry is really based off of a male-centered, I mean, patriarchy, essentially, it is. And so I think when women have become a much bigger part of that, and we're trying to kind of get our space and get our foot in the door, just in terms of having equal rights for everything else out there, trying to now take control of our money, we're stepping into a world that really was built for men. So I think that I mean, myself as, an advisor, I was in the industry for 18 years, actively managing people's money, and I was one of just a handful of women. So even still, it is something that is not a woman-dominated field and has a long way to go. So the industry as a whole, it's full of jargon. It's full of big money. So they're trying to make sales. They're trying to gather as many assets as they can so that they can charge an annual fee and hold on to those assets. And the reality is, what ends up happening is, because they're looking for these bigger fish that they want to manage their money, the smaller fish that really just need some guidance and some advice sort of get left behind. And I think a lot of times that can be women. I think women, especially women business owners, they can, in the eyes of the current advisors, who often are men, I think they can be really seen as not worth their time, sadly. So that's kind of what I'm trying to change that mold and just take my professional expertise and my ability to, demystify some of this information and bring it to women in a more palatable and non-intimidating way, so they can get the advice and get the knowledge that they need to make those educated decisions without feeling like they have to hand over their money for somebody to manage it, or buy something essentially that's an ongoing commitment for them. So
And for small business owners in particular, right? You and I were sitting over coffee last week, and I was just saying, like, they only look at their P&Ls or their, monthly revenue coming in, and then they look at what their tax liability is at the end of the year. But what would you suggest is a different first step for female entrepreneurs when you're trying to get financially organized as a whole?
yeah, absolutely. I think that the best first step, and this is whether you're an entrepreneur or just a woman managing your family's money, it's really important for you to have full clarity on what your picture looks like. And that is, I mean, your business is obviously going to be a critical part of your personal financial situation. So it's really important for you to get that clarity of the whole picture. So I encourage people, kind of step one of the process that I take women through is called the clarity calculation. And it's something where they're able to literally lay out all of their information. They're able to, step by step in baby steps. So it's not intimidating. It's very approachable. They're able to figure out what do I have? What is my foundation? Because if you don't do this exercise, I mean, it doesn't matter if you have $100,000 or $100 million. Any person that I've ever helped do a financial plan, again, whether it was like a baby plan or a huge one, you have to create this foundation for yourself. So it's especially important for business owners because I think your head, like you said, you are so focused on the P&L and what's happening in the business that sometimes, looking at the big picture of how it intersects with your personal finances can get lost in the mix. So going through this process, going through this exercise is important to be able to get that overall clarity. And that's kind of what I'm trying to do in my first step of my process.
So when you're doing that, what do you mean by getting everything together?
Yeah.
Like I'm thinking, okay, this is how much I made last year on my tax return, but there's a lot more than that. Like what are all of the assets and liabilities that we need to start thinking about? Because I feel like it's all in our head and we don't ever like to put it down on paper.
Well, first of all, let's acknowledge that everyone is so busy, right? It's like, and so this can become one of those exercises. It's like, oh, later I'll do this, later I'll do this. And so I've really thought a lot about this and tried to make this like the barrier for entry. I've really tried to keep that as low as possible. And essentially, it's important that number one, you're looking at all your assets, right? So assets are going to be things that you own, whether it's your home, whether it's your bank accounts, your investment accounts, your business, right? The equity in your business, the value of your business. Those are all assets that you own and are, part of establishing your net worth. But we can't forget the other side of that conversation, which are your liabilities, right? So the liabilities are going to be things like your mortgages, maybe any credit card debt, student loan debt, medical debt, maybe notes that you have out that have to pay. Maybe you took a family loan to start a business. So those, going through this process really is taking it step by step. The first thing I do in my process is I'm like, all right, step one, we're going to pause. We're going to go get our bank accounts and I have a calculator that people go through. So they go and they take that one first step. They find all their bank accounts. They get them all in front of them. And by the time they go through future steps, they've gathered their bank account information, their investment account information, their property information, any other assets. And at the end of that process, they've done the same for their liabilities. So it's important to look at both sides of the coin and make sure that you do have that grand picture. But yeah, it's important to really look at, both sides of the coin because then you can make educated decisions about how you might invest in your business, how you might need to, be investing a little more in your personal growth from a financial standpoint. And before you can make those decisions, you really have to have that good financial foundation. I kind of liken it to if you don't go through this process, it's sort of like building a house on quicksand. Like, I hate these metaphors, but it's true. Like you really have to have this understanding. And like I said, I've had clients that literally have $100 million and we go through this exact same process because you have to understand everything that's out there before you can really make educated decisions.
So say you're looking at your net worth. We've gone through this process with you. What do you do if it's positive, which we're all hoping for, but what do you do if it's negative? And a lot of my listeners are small business owners. They may have a little bit more liabilities. They may be like younger, 20s, 30s, moving into their 40s. I think we all want to have a positive net worth, but then what do you do if it's negative?
Yeah, absolutely. I think if it's negative, you can focus on some key areas. First, like you need to look at, first of all, don't panic. Like this process is a judgment-free process, right? I think a lot of people get hung up on truly having kind of a negative money mindset and they don't even realize it. They're already doubting themselves. They get through this calculation and, oh gosh, I have a negative net worth. Like I'm terrible at money. And it just can kind of spiral for people. But I would encourage you, it's a judgment-free process, right? Don't beat yourself up. If it's negative, it's just a number. So let's look at now, let's take that information and let's figure out what we can do with it. Let's look at the composition of your debts. Are they quote unquote good debts like student loans or business investments that you've made that are going to generate future returns? If they're consumer debts like credit cards, obviously we need to be kind of addressing that. So take a look at them, sort of categorize what is the composition, and then focus on a debt strategy that can help you pay down the higher debts first, right? Which are often going to be those consumer debts that have the higher interest rates. So take the information that you have the empowerment now to make that decision and make a good decision to say, this is what I'm going to tackle first. And so hopefully you start with paying down those higher interest debts, and over time that liability is going to be small enough that eventually your assets will be a bigger number and that net worth will start to go into the positive. The third thing is, we're looking at composition of debts, we're looking at debt strategy for pay down. And the third thing is, don't just focus on debt elimination. We want to be trying to grow those assets while we're also trying to eliminate that debt. So I always encourage women. I know it feels great to have no debt and to just, like wipe your hands of it and be debt free. But I do encourage women, don't delay investing in your future, like through retirement accounts, through other investment accounts, because you are focused on paying down debt. You can do both at the same time. And that's especially true if you have some lower interest debt, like with a mortgage or subsidized student loans. So that's just ways to think about it.
Yeah, super good transition here in terms of, so what do I do for retirement and savings? And I'm self-employed. Like, I have to make these decisions myself because I don't have an employer who's helping me make them for me. So what are your best strategies for people in terms of future planning with retirement when we're running our own businesses?
That is a great question. And the good thing about these retirement strategies is that it can not only help your personal income, right, and give you a little bit of tax boosts this year, but it can be write-offs for your business. So it's important. I always try to encourage women because they think, oh gosh, I don't have the cash flow for that. I can't do that. And you have to think about it from a tax strategy to say, well, if I'm going to owe this tax anyway to the government, is there a strategy that I can put in place where I'm going to be paying it, but now it's actually going into my pocket instead of into the government's pocket. So good strategies are, for sole proprietors and small businesses, especially for sole proprietors, a solo 401k. So it's kind of similar to a 401k that an employer might be offering, a bigger employer might be offering. But this one is specific for people who are self-employed and a spouse is also eligible to join, but you can't have employees for that particular resource. Then there are SEP IRAs. That's SEP, SEP IRAs. And those are great because the money that actually funds SEP IRAs only comes from your employer. So it's your business that's going to be funding that account for you. It actually doesn't come out of your salary deferral. And then, of course, there's always things just like Roth IRAs. Each of these different investment vehicles have different limits to how much you can invest in each of them. The Roth is going to be one of the lowest ones typically, obviously depending upon what your business income is, but there's always the Roth IRA. That's available for people who make, I think the limit's around $160,000 before you phase out of eligibility to contribute to a Roth IRA. But you can always do a Roth IRA. And although that doesn't help your tax situation this year, because you pay income tax on any money that you do put into a Roth IRA, any of the growth inside that account is going to grow tax-free in the future. So if you are young, like you mentioned, if you're a really young business owner and you're in a lower tax bracket right now, Roth IRAs can be great because you can pay the tax on it right now when you're in a lower tax bracket, and then the growth grows tax-free. So those are three different options for small business owners.
Yeah, for everyone listening, I have done almost all of the above. So I have SEP IRAs that I contributed pretty heavily to at the beginning stages of my business when it was just me. And then when I started kind of getting employees on board, I moved to a simple plan, which was very helpful. And then I also have Roth IRAs, and you can kind of do backdoor IRAs as well. So, and we didn't get into that, but just so you guys know, like I'm doing it. I know a lot of my friends are doing it as well. And these are the kind of conversations that we as women need to have. Like I am doing this, and I'm doing it kind of without my partner's say, honestly. Like
that's just it. I mean, these are individual accounts, right? These are individual accounts. You don't need anybody's permission to do it. You don't need anybody's sign off. I mean, these are in your name. So you can go open these, you can set them up. And it's really important to understand that it's kind of a multi-step process, right? You need to make sure that you are opening up the account, whichever format you settle on, whether it's a SEP IRA, solo 401k, simple IRA, which is another great one for small businesses, or a Roth, you set the account up and then you fund it, but then you do have to choose the investments inside the account. And so that's something that, make sure you're not overlooking that part where you can actually choose the investments. Because if you just put the money in there, it's probably going to sit in something like a money market or a cash type account. And you want to make sure that that money is actually invested and growing for you. So whatever provider you're using, they will likely have some type of guidance for you to figure out what is appropriate in terms of how old you are and the risk you want to take to get those funds invested for retirement. But yeah, definitely keep that in mind that once the money's in there, you got to make sure you take that last step to get it invested.
Is it different for each person when you're investing? Like it's all based on kind of your financial status that year? Or is there like a magic percentage number that people should be ballparking towards in terms of savings with retirement every single year?
Yeah, so this is such a great question. And the industry has sort of this rule of thumb of 10% of your income, right? That's kind of what we'd always talk and educate when we would do 401k meetings for folks. So 10% of your income, it's great to put back into a retirement plan. Obviously, if you've set something up where your business can match that, that's going to be great. That's going to be additional money going into the account. But the younger you are, time is the magic thing here. It's like the magic bean, right? That you plant in the ground and then the seeds sprout. The younger you are, the more time you have a little more room to kind of maybe delay it. But I would highly encourage you to not do that, especially if you're young, because the amount of power you have with the power of compounding interest, if you start investing as a young business owner and get that money going for you, and even if you have to stop 10 years later, the fact that you have started investing as early as possible, now that money is going to grow and compound on top of each other all the way up into and through your retirement years. One thing people don't think about much is I think a lot of people think about the age of 65 and, I'm going to retire at 65. Well, even if you retire at 65, you don't pull every dollar out of that account when you hit the age of 65. So even if you're a person in your 40s or 50s and saying, oh gosh, I'm way behind, I didn't start in my 20s, I'll never have enough money. The money that's in those retirement accounts, if you live to be 90 years old, which more and more of us are, those dollars could be in there for multiple decades. So don't beat yourself up if you're, a quote unquote late bloomer and you haven't started saving for retirement, because you're going to need money to be helping pay your bills all the way into your 80s and 90s if you make it. And so those dollars getting put in, even in your 40s and 50s, do actually have a long time to potentially grow. The point is, get it in there. Nobody has ever said, oh, this is too much retirement money. So it's important to make sure you're doing it and obviously save as much as you can. But I encourage people not to live in a state of austerity because they're planning for the future. You have to find that balance of enjoying your life today, but also being smart about planning for the future.
No magic number, shoot for around the 10% mark. But if you can't do that, at least put something in now because it's going to compound and grow over time. You're making me feel a lot better about my financial decisions right now.
Anything is better than nothing, right? Anything is higher than zero. So, do not beat yourself up. Just keep doing it, keep plugging away, and you'll be surprised. If you set money in there for quite a while and markets do what they've done historically, you're going to likely see some growth in those accounts. So,
okay, besides money, which we all want now in the future and for, our beneficiaries as well. What would you suggest in terms of future planning? And I'm going to get a little morbid here on the what ifs that no one talks about. I do this all the time in lawyer world.
Totally.
But with financial planning, I know there's like family asset planning, wills and trusts. I would love for you to talk about, and life insurance is probably a big one, or any type of like digital documentation you may need as an online entrepreneur for like, what happens if you're not here? What do you do? How do you set your loved ones up for success? And then also, how do you set your business up for success?
Yeah, this is a great question. And actually, in the very beginning of my time as a financial advisor, I worked for an insurance company. I worked for Prudential Financial. So the primary conversations I was having for those first number of years was about insurance. And I saw multiple. So when you're in that world, you see these scenarios come through the door. after someone has passed away, because now they, that, hey, I need to come collect this life insurance. But in reality, that little life insurance policy they got was not nearly enough. And now you're trying to help them. It was very informative for me to the importance of making sure you do some of this planning. Life insurance is critical. It doesn't, I mean, especially if you have children, but even if you don't have children, if anyone depends on you for income, anyone, then you should have insurance to protect that income. You do not need permanent life insurance. You can just satisfy this with a term life insurance policy. There's a company that I like called ethos.com. It's a newer company, and it's basically kind of a brokerage where you can go through, put your information in. They will help you. You don't even have to get a medical exam sometimes. Sometimes you do, but you can go through, and it's super easy. You can do it in the comfort of your home. But they put place policies with, very reputable companies around the US. And so it's a great and easy, like, again, low barrier of entry way to get that coverage. But life insurance is critical, right? You want to have life insurance, and going through this clarity calculation that I kind of mentioned earlier is going to help you bring light to what that amount might be. I actually have a separate calculator that is specific to life insurance, but the clarity calculation is great because it's going to give you an idea of what are all my liabilities, what assets does my family have to be able to use if I were to die, right? So because all of those things are factors in the conversation to figure out, okay, if I pass away, I want to make sure this is paid off. I understand that they're going to use these accounts in, after my passing, so those are fine, but I have a shortfall here and a gap of X amount of dollars. I need to make sure that that's covered. So very, very important to get life insurance covered. Again, you do not need permanent coverage, just get term insurance. Term insurance is where you buy it for a period of time, and after a term period, it goes away. So it's kind of like renting an apartment, sort of. You're renting it for a certain amount of time, and then when the lease is up, the lease is up. Similar to term insurance, you pay for it for a certain amount of time, and if you don't die during that time, which hopefully you don't, then the policy does lapse, but it is there in the event that you have, that you do pass away during that period. In terms of the other stuff, estate planning, wills, things like that, obviously I'm not an attorney and you're not an estate planning attorney, but just as well as I do how important those types of planning vehicles are for people as well. Again, talking about parents a lot of these business owners are parents. You want to make sure that you have some of those legal documents in place, because if you don't, there is an estate plan out there for you. It's just whether you've crafted it or if your state has crafted it, right? So the state has a plan for you if you haven't made a plan for yourself. And you want to make sure that, if you don't like what that state plan is going to look like, you want to make sure that you get your wishes written down and really identified, so that in the event of your passing, your children go to the guardian that you want them to go to. Your assets go to the place that you want them to go. So getting, a will or a trust set up can be really beneficial for that. One thing in this digital age that you kind of mentioned is this, digital file, right? Kind of like that digital sort of death directory, right? It's always good now to have a resource available in the event that you die of, hey, here are the accounts, here's my passwords, here's how to access, whether it's business accounts or things like that. Power of attorney type designations can be very helpful. They can be a springing power of attorney. You can have beneficiary designations that are set on accounts that help the transfer of some of these accounts at death. But having some of that information written down and compiled together so that there's maybe a file that somebody goes to look at if you were to pass away. It's a pain in the butt to create it. It can be really annoying, but man, I tell you what, the people who I have seen come through the door that had prepared, their spouse had prepared or their family member had prepared, the amount of relief that they have, so they don't have to struggle going through this process of actually getting the financial stuff together after while they're mourning their person that passed. It's incredible the difference it makes. So I know it's frustrating. I know it can be a pain in the butt, but really encourage you to take the time to kind of step through and make sure you have your information in a concise area where a person can get what they need from you at your passing.
You said all of this so well. I'm going to touch on a few things because I'm a lawyer and I can't help myself.
Please do.
Wills and trusts. The one thing that I have learned is people always think that they need a will, which you do, but a lot of that's just for like personal belongings and things along those lines. I loved when Molly said and or a trust. I am a huge proponent of a trust because trusts don't go through probate. So basically, you are bypassing your state default rules for if you pass and what the state would want to happen and go down, and you have to go in front of probate court, and you guys, you're holding everything up for months and months and months, if not years, if there are disputes, because more disputes come about in that realm of possibilities, because a trust is going to spell everything out and be like, this is exactly how it's going. And you have a trustee making decisions for you. And then a lot of times in the trust, you're telling people what to do. And then you're combining that with a will, which is already telling your trustee what to do too, and all of your other beneficiaries. So both are really important. I know trusts when you work with an estate attorney, and definitely go work with a trust and estate attorney on this in your home state, because trusts are very state specific. It does cost a little bit, but that cost goes a long way towards future planning and solving a lot of heartache down the line for your loved ones. So both. The other thing I will say is the difference kind of between a digital directive and a death plan. Death plan for your business. Sorry, let me tack that on. A digital directive, which we have, I will link it in the show notes, is just really like, here are all of my passwords and here are all of the things, and here's who I designate to do all these things for me, or multiple people. If this person can't do it, here's my secondary person. So that's legal documentation. It's notarized as well, where if you have accounts that you can't get into, or someone can't get into upon your incapacitation or death, this document is like something you can give large corporations, and they basically have to let that person in. So that's really important. I've seen a lot of people with like social media platforms and things that it's up for years after something were to occur. And like online bank account information or ties to your bank account, like Stripe, back-end stuff that's like really hard to get into. A death plan for your business it's a little more than that. I think of it as like a bird's eye view of, hey, here's my layout of how I organize my business, what I'm doing with my clients. Here's some alternative professionals that I would suggest you reach out to take my place. I've also talked to them in case of if something happens to me or if something happens to them, we're kind of each other's person. That's really a good thing to do, especially with people in the wedding and event industry. Like if something were to happen to you, even if you were to get severely injured and you weren't able to adequately communicate that to your loved ones, and they're just like picking up the pieces, and it's so urgent that they figure out what you would want them to do, like that kind of death plan for your business or like incapacitation plan is really, really key. And it includes some of the things with the digital directive, but that's more of like, you don't have to get it notarized or like signed or anything along those lines. It's like, hey, person, here's my lock and key to my business if something were to occur. And I would tell multiple people, keep it small, like 2 or 3. But sometimes people just tell one person, and like, what happens if that one person isn't able to look at your death plan for your business? So I just wanted to touch on that a little bit. Molly, any other further comments?
No, it's very, looking at that bird's eye view is kind of very similar to what I talked about with like the clarity calculation on the personal side. Be seeing everything that you have. It's like this process helps you see everything that you have and kind of make a contingent plan for it. So I think that that's great. A great process to go through. Highly encouraged.
All right. I kind of have some rapid fire questions for you now, because when we were chatting, you told me, okay, we got to do our net worth, then we got to do our future planning and retirement. And now I'm like, okay, back to like my P&L and my business and like monthly what's coming in and out, because I feel like we're all laser beam focused. We kind of have like blinders on too, if that's the only thing we're thinking about. And you had told me that now, once we go through those first 2 steps, now we're kind of back there. If you are back there, like, what type of bank account should you have for savings, like personal and business? And then what should you be saving personal and business every single month? I'm sure it differs, but like, what would you recommend? Because I think people just need a starting place.
Yeah, absolutely. I think it makes sense for as a business owner, you're going to have obviously your operating day-to-day account, right? So you have your operating day-to-day account. You're going to have an account where you're reserving money for taxes, right? Which obviously I'm sure you know a story where there's been a business owner that has not reserved money for taxes, and all of a sudden they've had a really difficult
Not
tax
good.
conversation, or yeah, a very different, not a fun tax season. So operating account, I think a reserve account for taxes, and then obviously just like a business savings account, right? We want to keep this business savings account separate from your personal account. It's like what isn't there a legal term like the iron veil or something? You want to keep the business assets away from the personal assets. And so that these business assets are going to be the ones you don't want to pilfer those on the personal side. Being able to have that backup there, and obviously you're working toward at least a number, 3 months of operating expense to build in there. Going to be dependent upon, the cyclical nature of your business. I'm sure a number of, wedding vendors and photographers do have a cyclical nature to their business. So helping maybe bolster that business savings account to go into those slower seasons is going to be something to consider. But having those three accounts for your personal or your business side, excuse me, and then on the personal side, essentially, personal checking account, a personal savings account, and and then dedicated investing. On the personal side, I kind of like to think of it as like a triangle, right? At the top of the triangle is that operating account. So whether that's a bank account that you use a lot, whether it's a credit card that you kind of put everything on and then pay off, that's just sort of the account you use. That's the top of the triangle, and the middle of the triangle is going to be sort of that buffer account, which to me is also like the emergency fund, right? But I like to kind of call it the buffer fund, so that it's just basically a protection for you to be able to use those funds should you need them, should something inevitably always comes up, so that you don't pilfer the bottom part of the triangle, which is the investment account, which should be the longer term savings and the longer term goal setting for you. So kind of thinking of that triangle approach of, account for day to day, buffer account that is kind of the mid range. You might need it in the next 6 months or 6 to 18 months. And then that bottom triangle part where those are going to be where your retirement accounts are, and any other savings accounts that you really don't want to use in the short term, those are in that bottom, and you want to protect those with that buffer account. So those are kind of the accounts that I would be looking at. In terms of what to save in each, I kind of mentioned, about 3 months in the business savings, depending upon your business, right? If you might need a little bit more, a little bit less. On the personal side, in this buffer account, it's really personal, right? I mean, people who are actively in retirement like to have 1 to 2 years of money in savings. And that's because of things like the market we've been living through that's been very volatile, right? If you're actively in retirement, you don't have an income, people like to have a pretty robust buffer fund so that they can take their monthly income that pays their bills out of that instead of sell their investments when they're lower, when the market inevitably is down at times. But if you're not actively in retirement and you're in a younger part of your life, looking at maybe start with 3 months. I mean, depending upon what your expenses are, just shoot for 3 months. And if that's overwhelming, shoot for $1,000. Just start with $1,000. Start with something. People are probably getting some tax returns now this time of year. So take some of those assets, put it away in this buffer fund, and that really should be just set in like a high yield savings account. I mean, nowadays where the Fed has interest rates, that translates to slightly higher interest rates in things like higher yield savings accounts. So that's kind of nice. But those buffer funds should be in a high yield savings account, and shoot for 1,000 if anything bigger than that is overwhelming. You want to make sure you have enough in there that you're not leaning on credit cards when things inevitably happen. So get the 1,000 and then work toward maybe 3 to 6 months of your income in that buffer fund.
You answered my question I was going to ask. What do you do with that buffer fund? Is this like a typical savings account, or do we do a high yield savings account, money market type of situation? And so you're saying high yield savings or money market for sure?
Absolutely. I mean, I think so much of figuring out your money is behavior. It's like behavioral finance, right? And just kind of like you're sort of tricking your brain into not panicking when the markets are down by having an account like a buffer fund, right? So if you're like, oh, this account over here, it's still clipping along, getting 3 to 4%. That's great when you turn around and you see the S&P is down 8% in a day, right? Like that doesn't make anybody feel good. It doesn't make financial advisors feel good, right? But psychologically, you can kind of, it's like a safety, it's like a security blanket, right? You get that buffer fund, you know that it's just going to have this nice clip it along of yield every year. And that will help you not panic when those other accounts are going through those fluctuations. But yeah.
What do you think people should do right now in terms of kind of recession proofing their business in the case that it could occur? Since a lot of us in our 30s have kind of seen what that looks like because we've lived through one. And then we've all lived through a pandemic. And it's like, okay, now what could occur? What now? There's a lot of uncertainty. Is there anything we should be doing? Because I know some people are saying like cash is king, hold on to cash, put everything in a high yield savings and money market. I think there's also people saying like now's the time to invest if
Right.
you are kind of at that age. What do you do as a business owner though? Because you're worried about like potential income coming in too.
Yeah, I mean, those are two different conversations essentially. I mean, it's like now's the time to invest. Well, yeah, that's true if you're talking about long-term investing. Like, great,
Mm-hmm.
now everything is a little bit cheaper, right? Sure, put money into the market now when things have gone down in price, but also recognize that it's going to be volatile. Like, I would imagine the next 4 years are probably going to be volatile. Hopefully, we'll get a little bit of a smooth out so it's not such a bumpy ride. But I think it's going to be, a tough few years, at least probably till the midterms, and then maybe things will smooth out. So that's a long-term conversation. Absolutely. If you have some extra money and it's specifically for a long-term goal, now could be a decent time to put a little bit of money in. But if you're trying to plan and insulate yourself for a recession, we really have to focus on what we can control, right? I mean, obviously the tariffs are affecting vendors in certain ways, which can be super challenging. And obviously your hands are tied at some point. So I like to just talk to people about what they can control. They can really control what they spend. And to an extent, what they earn, right? So I'm not really a budget queen. Like, budgeting is great for the people that it works for. It's awesome. It doesn't work for most people. So I like to encourage people to have money awareness, right? Know what you have, which is part of that clarity calculation I talked about. Know what you have and why you have it. And then take that awareness into these bumpy times to say, okay, well, I know I can control a little bit of this part of my spending, whether it's personal or business, right? And if you're trying to insulate your business, are there ways that you can increase your skill set? Are there ways that you can increase your value to your customers so that you can charge a little bit more? Continuing to foster your, continuing to grow your education so that you can garner higher rates with customers, I think is an important thing to always do, whether there's a recession or not. But now more than ever, I think that's important to be able to just expand what you can provide for people, because that's going to turn around and bring in more income for you. But protecting yourself from the downturn, in terms of having that buffer fund there, looking at opportunities for long-term strategies is great, and then continuing to just expand on what your own personal skill set is.
What do you think is like one thing that female business owners could do right now, this week, like an actionable step that we could take to be more confident about our finances and our future?
Absolutely, go through my clarity calculation genuinely, because as I said earlier, whether you have $10 or 100 million, you have to get a foundation of where you are. You have to understand what you have, and then by extension why you have it, right? Why do I have 6 bank accounts? Because when you go through this process, you're going to gather everything that's in your ecosystem financially, and then you'll be able to make educated decisions. So if you feel like you're kind of winging it, you're just sort of throwing darts at the wall, going through this process, I promise you, is going to give you clarity to then make more educated decisions. In my particular process, I walk you through step by step. Like I said, I'm trying to keep it very accessible. Nobody likes to, here, take this resource, and you open up a gigantic spreadsheet, right? That immediately overwhelms people. But I've tried to really parcel it out so that it's really bite by bite, and you can do it one piece at a time. So this week, that is what I would encourage people to do, is start to think about this clarity calculation. I, can share the information with your listeners, but that will give you a great overview of everything that you have so that you can make educated decisions about how to move forward.
Yeah, she makes it so, so simple, you guys. We've even sat down and like she's helped me with mine quite a bit. So I highly recommend that you look into this. Go to the link in our show notes, description of this episode, and I will make sure that you have quick, easy access to that as well, because that is your first step forward. Molly, is there any other like favorite tools or apps? I know you mentioned like one insurance company that people could go through. Is there anything else that you would recommend to kind of keep finances and future planning a little bit stress-free and easy for everyone?
Yeah, I think, going through this exercise with the clarity calculation is really great because then you're going to have that information. And then there are tools out there like Rocket Money that you can, aggregate your information into so that you can see it all. And that way you've connected your bank accounts, right? And so as long as you're comfortable with that and that technology, it's going to update for you on a daily basis, right? But going through it manually first so that you can say, oh, I need to consolidate these accounts and I need to get rid of that account, or I can put these investment accounts together.
Mm.
That is a great first step. And then you can use some of those tools to kind of streamline it and help you stay on top of it, because you don't want to just be like, I'm going to look at this once every 18 months. It's something you're going to want to continue to take a glimpse at. And as you try to get that asset level higher so that that net worth number is positive, you want to keep an eye on that over time without really living in a budget, right? Like I don't want to budget out my daily coffee. Like that's not living, right? But you want to have that money awareness. And I think going through the process and then using tools like Rocket Money are really good.
Okay, and you guys, I'll make sure I link all of these. And if Molly comes up with any others, we'll make sure that you guys have access to those too. Molly, what's one last final money mindset that you can give to all of our listeners on building wealth?
I think it's very important for you to recognize that you have money messages that have been instilled in your head from your parents, from your community, from society, and they might not be positive. And I think the awareness for you to go through and say, am I really bad at money, or have I just been told I'm bad at money? Like
Mm.
changing the narrative from I'm bad at money to I'm learning new things about money every day, right? That might sound woo woo and that might sound silly, but it's so important because you have been sort of indoctrinated with this message of, women are bad with money, and maybe your parents were objectively not great with money. So now you think that's just your fate. That is not true. Those are just thoughts, and thoughts are not facts. Okay, so really being aware of what those thoughts are as you're going through, whether it's looking at your P&L for your business, whether it's going through this clarity calculation for your own personal stuff with your business, you know, understanding that, keep this neutral, right? I am learning new things every day about my finances because it does make a difference. And if you have an empowered attitude, then you can take steps toward improving your financial situation, even if they're baby steps, because baby steps, you'll get there eventually. It just might take a little bit longer.
If you guys can't tell, she has the knack for education on this type of thing. And Molly, I have loved watching your journey so far into entrepreneurship and helping other women with all of their finances. Where can people find you? And you guys, I specifically suggest that you go to her Instagram account that she's going to say, because she's crushing it on there. And I just love all the little nuggets and free tips that you give to people. And then I know you have a lot of free resources that you give out as well. So where can people find you to learn more?
I do, absolutely. So my Instagram is at Money Sense with Molly. Sense is Sense. So at Money Sense with Molly. And yeah, definitely go on there. I have resources about money mindset that you can get. I've got resources about, beginner's guide to investing. And that is where you'll find my clarity calculation that, again, regardless of whether you want to learn how to invest, you have got to go through this process first to understand everything that you have. So Instagram, Money Sense with Molly. My website is just www.moneysensewithmolly.com. And yeah, I would love to extend actually my clarity calculation. There's a discount code for Paige's listeners. If you guys would like to go through that, I'm giving you actually a 50% discount. Would love to get your feedback on that and hopefully see how it's helping you gain that clarity. But
Perfect. Yes. And you guys, I will make sure to reach out to you if you do utilize that tool. We both kind of want your feedback on it as well, because we're really trying to empower all kinds of women, particularly women business owners, with their legal protection and their financial and future protection too. Molly, thank you so much for joining us today.
thank
This was
you.
so wonderful, insightful,
Yes.
helpful. Thank you. Thank you. Thank you.
Thanks, Paige. I appreciate it so much. Good to see you.
Thank you so much for tuning in to today's show. Be sure to visit thelegalpage.com for contract templates, blogs, and additional legal resources. If you found this episode helpful, please share it with a friend or on Instagram with your favorite takeaway, and make sure you tag me at The Legal Paige. Sharing is one of the best ways you can support the show. And if you've been tuning in for a while and you are finding value in these episodes, it would mean the world to me if you popped over to Apple Podcasts or Spotify and left a rating and review. Hearing your feedback absolutely inspires me to continue creating podcast content. Lastly, you can join my free Facebook group at tlpfacebook.com, and this is where you'll get access to me, my legal team, and thousands of other entrepreneurs for unlimited business and legal Q&A. Until next time, my friend.